Hi traders, and welcome back to another video. My name is Marco Meyer from algostrats.com, and today I'm going to talk about one of the most common trading errors out there, and that's trading your P&L instead of the market. So what does that mean, trading your P&L? Trading your P&L means that you make irrational trading decisions based on a single trade's P&L, today's account P&L, or account balance. So this comes in various flavors, and I'm sure there's a couple more I'm not thinking about at the moment, but the most common ones probably are these three here. So first of all, you are in a trade, you see it going up and down, maybe you're down a bit, then up again, and you just want to get out at break even, for example. That would be making a decision based on a single trade's P&L. Another example is today's account P&L. So you've been trading for a few hours, you've been up and down during the day, and now you decide under no circumstances, do you want to make this a losing day anymore? So you make trading decisions based on that. And another one is the actual account balance, maybe the account opening balance. You don't want to go below, for example, or you don't want to give up that specific number, let's say $50,000, for example. You don't want to go below that anymore because you've been above, and now you want to keep that under all circumstances. And obviously, making decisions based on any of these doesn't make any sense, because what you should do, of course, is follow your trading rules, base your decisions on what's going on in the market and not what's going on with these numbers. And the easiest way to get rid of that is actually to just turn them off in your trading software if you can. And if you can't do that, definitely learn to ignore it. You have to focus on a series of trades, not on a single trade. And I'm going to give you an example of that right away. So here we are looking at a 60-minute price chart of the Euro future. So to make up an example here, let's say we are trading the Euro in the early morning session at the European session, and we're trading an opening range breakout, meaning we would want to go short below this low here at 1188, which would be the low of the overnight session. Price is right here at the moment, and on the next price bar we actually get filled. Now our stop logic for this would be to simply trail a stop based on a volatility-based stop loss using the average true range here, and don't get out unless we get stopped out. So we have a strategy here where naturally we're going to have a lot of small losses, but occasionally we're going to catch that big day and have a nice winner. So we are short here at 1188, and our stop loss goes right here at 1204. And at that point, our beginning trader might get scared a bit because price has been down nicely here, but then it went up again, and he might be a bit scared at the moment. Following our logic, our stop now goes to 1203 at the close of this price bar. The next bar looks like this, trader's more happy again. Next bar looks like that. And now our trader gets scared and decides, okay, I'm up whatever, a couple of ticks right now, I'm up $80. I don't want to lose anymore with this trade. I want to have a free trade, so I'm going to do the following. I'm going to put my stop loss down to break even so that I cannot lose anymore with this trade. Instead of having a stop loss up here at 12015, our trader puts a stop loss at 1188 where he got in. Now on the next price bar, the following happens. Price moves up right away at the high to 1188. So our stop loss gets triggered and we are out at break even. And now the market continues to move lower. So following our rules, we still would be in the trade, and our stop loss would now go to 1192. But our beginning trader is already out of the trade. The next price bar closes lower again, and at the close of this bar, stop loss goes here at 1183. And on it goes until we finally would get stopped out right here at about 1265, which is around about 60 ticks, so about $750. Now what just happened is a real disaster, because our trader didn't just lose nothing and get out at break even. What actually happened is that he lost $750 of profits. That's the reality of this. And that's why you have to think in a series of trades. You have to think about what is after a huge number of trades. So if I do this every day, what's going to happen if I do a certain thing? So for example, what's going to happen if I move my stop loss to break even quickly? Is that going to help me or is it not going to help me? So after 100 trades, Is this going to give me a better result as if I don't do it? And most of the time the answer is going to be no, it's not going to help you. It feels really good to say right here, oh, okay, now finally I can get relief from the pressure of this trade, put my stop to break even, and then I know I'm not going to lose anymore. Maybe I'm going to get a tick or two slippage, but it's not going to turn into a real loss. But for that feeling, you pay a really, really high price. And this price often makes a huge difference in the year's performance. And for many traders that I've taught, it made the difference between a break-even trader and a winning trader. You have to manage your trades in the way you get the most money out of it, that you've tested and that you know that it's going to work the best that way. And this is just one example. There's many other ways what can go wrong. Another one might be, for example, you're up on whatever, $300, and then you decide, I'm going to get out of the trade now. I don't want to give back any of these profits. I want to keep those $300, so I'm getting out right now. And again, you might miss a big opportunity, a huge winning trade, which in long-term performance is definitely going to be catastrophic. Of course, the same is true for trading today's account P&L and your account balance, which is even more weird than doing a decision based on what's going on with a single trade. It doesn't really matter what kind of performance you're going to have today. What's going to matter is what kind of performance will you have at the end of a year, for example, or at the end of 5 years or 10 years or your whole trading career, basically. That's what you have to focus on as a trader. You can't focus on single trade results. You can't focus on today's results. You can't focus on this week's results. What you have to focus on is your long-term performance and base your trading decisions on what's going to work best long-term. So I hope you learned something about trading, or better not trading, your P&L today. I also want to let you know that if you have any questions, you can just send me an email to marco@algothreads.com, get in touch with me on Twitter and Facebook. And the other news is that AlgoThreads FX is now live since this week, and we're starting out with a free trial, so you can sign up your free trial account on algothreads.com. It's 100% free. You can check out the service for a whole week. And I also put on a video on algothreads.com where I present and walk you through AlgoThreads FX, explaining what it is in detail and what makes this a really unique service, so you might want to check that one out too. So thanks for watching, see you next time, and take care.